Hi everyone, Tom Gile with the Gile Group. Hey, today is Friday, October 23rd, coming to you with the latest Gile Report. For months now, we've been talking about low interest rates. Rates are low, another record low. Been hearing it since, probably March, April, and it almost sounds like a broken record. Rates hit an all-time low again this week. But what does it all really mean? And so we can hear the numbers, but unless we put it into perspective, it's really hard to understand. So I'm going to ask you a couple questions. Would it be helpful for you if you're able to put a couple $100s per month back in your pocket by reducing your monthly mortgage payment? Or better yet, would it be helpful if you had an extra $100,000 to spend on that new house that you've been thinking about? That's actually the reality of the market we're in today. So let's break it down, take a look at what today's interest rates really mean for buyers in this market. So first here, let's take a look at a little historical information here over the last 2 years. Interest rates, like I said, have been dropping quite a bit. In November 2018, they were just under 5% at 4.94%. Even then, we're thinking, that was a pretty decent rate. Last year, a year ago in November, they had dropped down to 3.78%. So some pretty decent savings, over a percentage point there between the 2 years. But looking at where we're at today, actually hit another record low, big surprise, 2.8% for a 30-year fixed. So, we are a full, almost over 2 points below where we were at 2 years ago. So what does that mean to you as a buyer, a home buyer, and what's that going to mean to your mortgage? Well, let's break it down a little bit more. For every 1 percentage point change on $100,000 borrowed results in a savings of about $55 a month in a payment. And like I said, mortgage rates have gone down over 2 percentage points since November 2018. So let's break it down even further. Let's assume a $325,000 mortgage. If you were to have financed that in 2018, your monthly payment would be $1,733. If you had done that a year ago, that same mortgage of $325,000 would result in a payment of $1,511. If you were to do that today, that $325,000 mortgage would have a monthly payment of $1,337. So what does this mean? Again, assuming that $325,000 mortgage, your monthly payment would be $395 less today than if you took out that same mortgage 2 years ago. That's putting $400 back in your pocket. In addition to that, these low interest rates are having a huge impact on your buying power. Again, let's take a look at that $1,735 a month payment that you would have done in 2018. That same payment, if you're to do that in 2019, you could actually borrow $372,000. Or if you to do that same payment today, you could actually borrow $422,000. That's almost $100,000 more than you could 2 years ago with the same monthly payment. So let that sink in a little bit. If you've been thinking about, maybe stepping up and buying a larger home or making a change, you've got an extra $100,000 in buying power. Now, I know prices have been going up over the last several years, and the market has been very hot, but they haven't gone up at that rate. What we've been seeing over the last couple of years, we've been seeing about a 5% increase per year in the Portland metro area. So if we look at 2 years, prices went up about 10%. At the same time, if you look at your buying power has gone up about 14% a year over the last couple of years. So you're up almost 30% in buying power with about a 10% increase in prices. So even though things are more expensive today, the reality of the situation is, assuming you're financing, you're actually able to leverage that low interest rate and get more of a home today than you could 2 years ago. You've got a real opportunity to take advantage of this current market and these interest rates. If you're thinking about staying in your home and you haven't already done it, refinance your house. You can put several $100s a month back in your pocket every month. If you've been thinking about, hey, I want a newer house, a nicer house, a larger house, now's a great time to do that. Like I said, your buying power is stronger than it was 2 years ago, so you're able to leverage and take advantage of the current market opportunity and step up into that new home. Even though it may be more expensive, your monthly payment's going to be lower. Your buying power is greater than it was 2 years ago. Want to learn more about what these great rates can do for you, or want more information on the economy and real estate market? Send us an email, Ask the Gile Group at askgilegroup@gilegroup.com, or give us a call. Follow us on social media, DM us there. We'd love to hear from you.